Yes, sir. Yo, what is going on, guys? It's the world's most drama-filled finance channel. However, in today's video, we are not actually going to talk about drama. We're actually going to give some incredibly important stock market updates coming up for this week and things that I think that you also know, as well as my overall philosophy of what I personally plan to do in the market. Not financial advice, of course. Obviously, I don't know if you guys can tell. I have no idea, but just to be completely transparent, I seem to be getting a little sick here. I mean, I've had a runny nose all day, and the symptoms are getting worse, and I appear to be getting sick. As a matter of fact, I was debating on even releasing this video, but the reason why I've decided to do it instead of get some rest is because this is going to be a pretty interesting week, and it's, you know, the start of a new week. We're at a pivotal point of resistance. We're at a point where I personally believe that a lot of the traders and some of these hedge funds are going to begin to start shorting. And so that's why I want to go ahead and get this video out, even though your boy's a little bit under the weather, but that's okay. Let's go ahead and actually get into this news. So let's just summarize kind of what happened next week, right? So the economic data in recent days, right, has basically reassured investors that inflationary pressures are beginning to cool across the economy, right? This is after climbing at a steady pace since early 2001. Now, the producer price index, which is PPI, on Thursday showed prices fell 0.5% from the prior month compared to expectations of a 0.2% increase. On Wednesday, you had the consumer price index CPI, which showed that prices stayed flat over the month. So remember, prices didn't increase. They stayed flat. That's why the White House kind of came out and said that inflation didn't stayed at zero. They were talking about that month number. I know that's very controversial, but actually they were right, because that's actually what happened. Prices were flat, which means they didn't go up month over month. And they also rose less than expected in terms of the year over year, which is 8.5% annually. That was actually better than expectations, which was at 8.7%. Moving on the heels of lighter prints for consumer producer prices, a reading on U.S. import prices on Friday reflected their first decline in 7 months in July, according to data from the Labor Department. And then import prices fell by a better than expected 1.4% last month after rising 0.3% in June. This is the largest monthly drop since April 2020. The reason why I just told you guys all of that is because that's essentially what the market is using to continue to rally, on top of the fact that they really are starting to believe that Jerome Powell and the Federal Reserve are going to pivot, or at the very least kind of chill out and slow down on the rate hikes, which actually would be bullish. I think everything kind of falls in place of why you haven't rallied this month. I mean, think about it. In the month of August, there's no FOMC. So you do got some Fed speakers that are still going to be speaking, but there is no official FOMC meeting. So that's pretty helpful. You don't have the next one until September. CPI beats expectations. PPI pretty much beats expectations. All the different macroeconomic measures are starting to look a little bit better. We don't know if that's going to remain, but for right now, it makes sense why we're rallying. However, I do not think that is going to continue or sustain in the long term. And this is where it starts to get scary, because typically, whatever most investors think, especially retail investors who Wall Street calls dumb money, I typically like to take the opposite approach. Because retail investors typically, you know, no offense, but typically just don't know what they're talking about, you know? And these YouTubers fall in the same boat. A lot of these YouTubers with these huge followings don't know what they're talking about. And so I saw that people like Chris Sane and StockMo are going long and buying stocks. Me, Kevin, has gone long and bought stocks, you know, Nvidia and Tesla and all that stuff. I think that's a huge mistake. And when I start to see these types of people buy right here when the S&P is literally almost 4,300, not only do I think it's insanity, but it almost tells me that the opposite is probably going to happen. And so people often ask my investing philosophy. I'll explain it. I don't know why it's difficult to understand for most people, because I feel like I explain it so often. But I don't follow a philosophy that is, you know, I'm not a Warren Buffett guy. I'm not a boglehead. You know, I'm not I don't know, whatever investing philosophy you could think of. I just follow my own path, right? And that's all I can do. And some people disagree. Some people think I'm an idiot. Some people think I don't know what I'm talking about. That's fine. I don't care. I know the market crash portfolio is doing extremely well. For those who don't know, I started a new portfolio about 2 months ago. I call it the market crash portfolio, even though the market hasn't really crashed, but I call it that anyway. And it's doing really well. You know, up 30% in Disney, up 30% in Amazon, up 8% in Bank of America, and I'm up in the SP 500, right? I have Facebook, but I sold it. I think that portfolio is going to do very well, and I actually do think that portfolio is going to build me generational wealth. I haven't had much money to invest into it as of yet because I'm moving, But once I'm done moving and I've got everything settled, which will be in about a few weeks, I'll have more money to invest. I'll be able to throw a lot more money into there, and I think it's going to do well. But the key is my investing philosophy. This is how I honestly feel. I think most people should buy the S&P 500. I think the S&P 500 should always be your largest position. I think if you're going to buy stocks, it should make up a small percentage of your portfolio relative to your overall wealth. So let's say you got $500,000, right? If I got $500,000, 400,000 of that is automatically going to S&P 500. That's just the philosophy I believe in. Maybe even more than that, and then maybe 10, 20, 30,000 to go into individual stocks. Maybe more. I don't know. It depends. Like for me, when the S&P went to 3,700 and I was able to get some of these companies at absolute steals like Disney at $92, Amazon at $106, different things like that, I would have been a lot more aggressive. So instead of putting 10, 20, 30,000, I probably would have put like 100K. You guys get what I'm saying? I hope that makes sense. But because of my financial situation, because I'm moving in with my girlfriend and we're buying all this crap, new couch, new furniture, new this, new that, all this stuff, it's expensive. Especially in the specific time that we're moving. We're moving in a time where rents are just insane, inflation, blah, 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 stuff y'all don't care about. But I hope I'm explaining my investment philosophy. So the way that I buy is when it comes to individual stocks, I buy when they're undervalued. It's really that simple. And I know a lot of people think like, oh, you're timing the market, you're timing the market. I'm not timing the market. I don't know how many times I got to say that. The way that I buy is when the S&P 500 goes to 3,700, which it did. The reason why I started to buy is because when the market corrects like that, when it goes down 20%, which is exactly what happened, it goes to a legit bona fide bear market. That's when I start to look at stocks. Because typically, when the indexes are down that much, typically, not always, but typically individual stocks are normally down too, at least most of them. Obviously, some of them like Enphase are going to be outperforming, which this year Enphase is absolutely outperforming the S&P 500. You're going to have stocks like that. It happens. But for the most part, there are going to be a lot of deals that you can find. And that's what I did. I went and found some deals. Now, there's some other stocks that I wish I would have bought, but you can't go back in time. The bottom line is that is the way that I invest. And so I retain my opinion that these YouTubers who are buying when the S&P is at 4,200 are stupid. I'm sorry. I think we have a lot more pain to go. I know people don't like it. I know people get upset when I say it, but I don't care. That is what I honestly believe. I am going to wait. Now, a lot of people think, oh, you're timing the market. What if the market never goes down? Blah, blah, blah. If it never goes down, then I'll reassess my position and I'll consider things from there. But based on everything that I've seen in this bear market, we've just seen lower lows and lower highs. So why would I buy at the higher end of the lower high? Do you guys get what I'm saying? Maybe I can explain it better this way. Let me go ahead and pull up my Webull real quick. I'm going to pull up the S&P 500 chart because I really want to explain this correctly. And again, you don't have to agree. I really don't care. I just share how I feel and what my thoughts are, right? That's just kind of what I do, and that's really the best thing you can do. So let me show you guys what I mean when I say the lower highs and all that stuff. Let me show you. So this is what I mean, right? So you're looking at this chart. We can see right here, ever since January, which right here, January 12th, ever since January when the S&P was at 4,700, you could see that by the chart right here, you could easily see that we've reached higher lows and, we've reached lower lows and lower highs. So this is a high, but it's lower than this high, right? This was about the same in March, but then you see we made that next leg down. So you got another high right here. Then we go further. Then you got another high right here. Then we go lower. Now you got another high right here. I think what's coming next, guys, is we're going to go lower. That's what I think. Now, there's no guarantee that we'll go lower than 3,600, which is the low that we have for the year so far. But I think we're going to go down at some point. I don't think we're going to go be back in a bull market. I don't see why we would. It doesn't really make sense to me. But, yeah, that's just my opinion. Like I said, you don't got to agree. But so far, it's been working well for me. The market crash portfolio has been doing excellent, and I plan to be very aggressive and buy when the S&P goes back under 4,000, which I strongly believe that will eventually happen. Okay, the last thing I want to talk about is the earnings. Earnings are actually going to be extremely important. You've got some really big retailers that are reporting earnings this week. And in my personal opinion, if they show any type of weakness, especially in their forward guidance, that could be bad for the market. And their earnings are going to tell us pretty good amount of how the economy is doing and what we can expect going forward. There's no doubt about it. Let me go ahead and look. Let's actually look at what earnings we got. So we got ZipRecruiter, Tencent, Weber. Tuesday, you have Home Depot. You've got Walmart. Those are the two main big ones. Then on Wednesday, you've got Lowe's, you've got Bath and Body Works, you've got Target. Looks like TJ Maxx, I think that is, Krispy Kreme. Thursday, you got Kohl's, you got Ross. Then you got a few others. Then Friday, you have John Deere, you have Foot Locker, and yeah, it's going to be very, very interesting. Obviously, the big three, I'd say, are probably going to be Target, Walmart, and Lowe's, maybe Home Depot too. But yeah, it's going to be a pretty big week for earnings as well. Wall Street's definitely going to have their eye on that. And yeah, that's kind of where we're at with it. I mean, we're kind of in a quiet period now, but I'm telling you guys, I strongly believe that the market's going to go lower. And history is going to repeat itself. Just like the last time I warned the market will go lower and everybody kept buying. And yeah, I think people are going to get murder she wrote. That's just the best way I can say it. So anyway, there you guys have it. That'll go conclude today's video. Thank you guys so much for watching. Feel free to like, share, and subscribe. And I will see you guys in the next one.